Buying a business and buying a house are pretty much the same process. Both involve using other people's money with a little bit of your own capital. Most people in their lifetime will buy at least one house, but most will never attempt to buy a business. However, most at some point would have worked for a business that was purchased with leverage. Now, here's the difference now. In paying off the debt of both, it involves using, in the case of the business, using the cash flow, and then you keep the excess. In buying a house for yourself, using the personal income, and if it is a property purchase for investment purposes, using the tenant's rent to cover the mortgage, and then you take the excess for yourself. But here's one of the big difference. When you buy a residential or say a property for investment, you are limited to some extent and how often you can increase the rent of the property and therefore increase your personal income. But with buying a business, through your effort, through your team's effort, and through using technology such as AI, you're able to increase that profitability continuously. Growing that business, for example, you bought it, you probably was doing 100K. You could grow that business to 300, 500K within a couple of years. And most of that excess you can keep as your own because the debt would have already been serviced from the base amount that you used to purchase the business.